Jerome Powell, inflation, the start of earnings. Could be a pretty busy week. No holiday means people should be in their seats. Firstly, the risk radar green again on stocks as we had a couple weeks of churn and then a breakout last week with a bit of a melt up in some of the non-NVIDIA AI trades. What's key is that the market still hasn't found any capacity to rotate outside of mega cap tech. We just kind of do musical chairs within the top 10 companies, which is fine. That works perfectly well for the passive investor. A lot has been said, and there's not really much to add about the extreme concentration. Everybody gets it at this point. What I think is more interesting is the other stuff has been actually quite volatile, namely Bitcoin. The red light for crypto has worked pretty well because it just keeps fading rallies. The dollar has been holding along for the ride, basically still managing that kind of neutral yellow territory. So nothing's changing here, and bonds still holding green because we keep catching bids in treasuries, which I do think generally makes sense. Firstly, though, what matters most for stocks is the semiconductors, watching to see if chips can get a fresh breakout and a push to the highs. The relative strength is picking up again, and when you've got a high momentum trade like this that's very close to a fresh breakout, you want to see the RSI get above 80 again, get above 70 rather. We're at 67 right now. So that's pretty close. It's heating up again quite a bit in the semiconductors thanks to NVIDIA coming back into the forefront today. Chips right below their all-time high, 280 on SMH. That's going to be very encouraging for bulls and potentially kind of a fresh leg if we can get through there. The other thing I'm watching, of course, is still on the macro side with Jerome Powell. Can't sleep on the potential for any volatility in bonds around that, given inflation later on in the week, and that Powell's going to be pressured to talk about what he sees far out, but he doesn't really like to talk too far out. Catch, though, is that he might be getting pressure to try and commit to September. That way it doesn't look like he's adjusting based on how the election polls are going. But I don't really think that's on his mind, generally speaking. Let's stick with the charts. And the chart did basically do exactly what I thought it was going to do and was talking about for weeks. The dollar was very elevated in the white. Yields were very low. Yields caught up to the dollar, but then the yield spike didn't really make too much sense. So my view last week was that the dollar kind of had to soften up a little bit, and we got that. So the dollar's coming off a little bit, and now they're kind of commensurate, I think, over the last 30 days. Dollar and yields basically kind of relinked again, and that's helpful because generally the two move in sync with one another. They had been out of sync, but watching to see if inflation doesn't drop low enough this week, if we don't get another good drop in CPI, will we see yields come up off the lows and the dollar remain firm? I think generally still it's just hard to expect the dollar to drop too much given what other central banks are doing and what the Fed can't do, which is they can't really cut until September. So bonds, though, I think are interesting. We've seen some bearish activity the last few weeks, but ultimately bulls have been supportive. Treasury auctions also are going to be key in assessing whether or not the market's considering future fiscal impact. So there are a few kind of ancillary things for the bond market this week outside of Jerome Powell, of course. And then lastly, I want to watch Bitcoin. I also want to watch it relative to gold as well. Gold has been doing much better lately. It's been holding on. It's been steady. It suggests that in the absence of breadth and further participation in the stock market, people are finding use for gold as kind of a ballast in the portfolio, whereas Bitcoin's sort of a extreme lowest of quality speculative trade is just getting left behind in the dust. And it tells us a lot about what's happening in the market, because at the end of the day, the indexes keep grinding higher on the back of big tech because that's where the quality is and the earnings are, but those earnings don't start for a couple of weeks. So in the absence of information, continue to expect basically the same, unless, of course, bonds make a problem for us. So it could be a fun week. Have a great night.